In the 1920s, America experienced economic prosperity and a booming stock market. People were making money, investing, and living lavishly. However, signs of trouble started to emerge. Production slowed down, wages fell, and interest rates rose. Despite these warning signs, investors remained optimistic. On October 24, 1929, known as Black Thursday, the stock market crashed and panic ensued. Share prices plummeted, wiping out a significant portion of America's wealth. The situation worsened on Black Tuesday, with the Dow Jones falling 12% and the markets losing billions of dollars. The Great Depression had begun. The stock market continued to decline for the next 3 years, causing massive job losses and bank failures. Unemployment reached a record high of 24.9%, and the country faced widespread poverty, breadlines, and homelessness. The effects of the Great Depression were not limited to America. It had a global impact, and its despair had an impact on the rise of Hitler and the start of World War II. The lessons learned from this devastating period were significant. It highlighted the dangers of unchecked greed, speculation, and debt. To prevent such a crisis from happening again, laws were enacted to safeguard financial institutions and protect deposits. Institutions like the Federal Deposit Insurance Corporation and the Securities Exchange Commission were established. While the hardship of the Great Depression are mostly forgotten today, we must remember the lessons it taught us. The power of fear, greed, and speculation still exists. We must remain vigilant to avoid repeating history.
Uncover the shocking truth behind market bubbles in this eye-opening video.